Hello, I'm Steven, the calculator guy, and today we're going to talk about Lyra Finance. So Lyra Finance is an options protocol that is, in my opinion, the closest thing you can get in DeFi to stock options. It is very similar in mechanics. You can actually see the Greeks. It's very intuitive if you've done options before, and I like it a lot. And the reason I want to talk about options, or the reason I'm talking about options more and more frequently, is because options are one of the many ways that you can hedge against a downward market or against a bearish market. And I want you guys to have those options available to you. And so I know I talked about Lyra before in previous videos, but now I'm going to do a full walkthrough how-to because it was heavily requested. So in this video, I'm going to go over how to bridge to the Optimism chain, how to interact with the Lyra protocol. I'm also going to quickly talk about what calls and puts are, just as a reminder, and then I'm going to talk about the future of Lyra or things that are on their roadmap. So let's jump right into it with how to get onto the Optimism blockchain. So getting onto the Optimism blockchain is actually pretty simple. Just go to gateway.optimism.io, and then you can bridge whatever assets you want from the Ethereum chain to the optimistic Ethereum chain. So the default is Ethereum. That's what I bridged when I first bridged my assets over. And I believe when I did it, you could only bridge Ethereum over, but now it appears to be the case that there are various assets you can bridge over, which is fantastic, in my opinion, for this chain. So you can see you can do Ethereum, you can also do Chainlink, LUSD, you can do USDC I saw down a ways, you can do RAI, so there are USDT, there are plenty of asset rep Bitcoin, there are plenty of assets that you can send over this bridge, which is really nice. So you would select your asset. Of course, you would bridge it just like you would bridge any other asset on any other major bridge like C-Bridge or AnySwap. And then it takes about 5 to 15 minutes to bridge those assets, and you'll be ready to go. Then you'll want to head over to app.lyra.finance /troll. Just the Lyra website. You can find this, by the way, on DeFi Llama. I never recommend clicking Google links because Google links can oftentimes be inaccurate, or someone could have paid to put a scam or spam link on the top. So you can do Lyra, and it'll pop up or populate the Lyra protocol. Click on that, scroll down, and click Website, and that'll take you straight to Lyra Finance, which is right where you want to be. And you'll click Start Trading to get to what I was just showing you before. So that's one way to make sure you have safe links, which I always recommend doing, especially in DeFi. So if you don't have the Lyra network, sorry, not the Lyra network, the Optimistic Ethereum network, one way to add that to your MetaMask is simply to go to this website, click Connect Wallet, click MetaMask, and then it will ask you if you want to add the Optimistic Ethereum to your MetaMask, that network. You can click yes, and then you'll have Optimistic Ethereum. So I'm just going to switch over to Optimistic Ethereum now, and then I'll click Connect Wallet, and I should be good. Now, it says log in and authorize your wallet. Really, I'm just going to refresh, and it's going to work. So refresh, as I always mention, is the magical button in DeFi, because once I refresh, you can see my wallet is connected. So keep that in mind. And if for whatever reason you're unable to add the network that way, you can also add it this way by making sure you're going from Optimistic Ethereum. It'll ask you to connect your Optimistic Ethereum wallet, and it will say, do you want to add this network to your list of networks in your MetaMask? You will click approve or yes, and then you'll have your Optimistic Ethereum wallet or network connection on your wallet. So, okay. Here we are, right? We're in Lyra. Good for us. Congratulations, all of us. Let's first talk about what calls and puts are, and then we'll talk about how to buy them and sell them. I will say, sort of just for your own edification and as a disclaimer, that I personally do selling of covered calls and selling of cash secured puts. So in terms of my ability to inform you about buying covered calls and buying puts, I will not be the best person to give that information. I can give you a basic understanding of how those work and what the profitability options are there, but really my purview is selling options. So I know I should be more versatile, and I'm working on it. So let's discuss calls first. If you are selling a covered call, effectively you're selling someone the right to purchase your asset at a particular price. We call that the strike price. So here we're using Ethereum, but you can also do Bitcoin and Chainlink. So in this particular example, the strike price is $2,800. So what you would do is you would collateralize some amount of Ethereum, and then if at the expiry at February 4th, 3 a.m., if Ethereum was at or above $2,800, then you would sell your Ethereum for that price, $2,800, and that would be that to whomever purchased the covered call. However, when you sell this contract, when you sell this option, you get premium. So for every 1 Ethereum that you collateralize, you receive $64. So 2 Ethereum would be 64 times 2, $128, right? And you get that $128 immediately, right? That's your premium to keep while your Ethereum is locked up and collateralized. So that's great. If the strike price, again, if the value of Ethereum goes above $2,800, then you will sell your Ethereum at the strike price, $2,800, and you will lose that Ethereum, but you will get the money, right? You will get the money, and you will have kept the premium because you get that premium immediately to do with it whatever you would like to. Now, if the price of the underlying, that means the asset that you've collateralized, in this case, Ethereum, if the price of the underlying is below the strike price at expiry, which is February 4th again, then you not only keep the premium, but you also keep the underlying asset. You keep your Ethereum. So you keep the premium, the $64, and you keep the asset, the Ethereum, you keep everything. You've only made profit. Congratulations, well done you. That's great. Now, as a rule of thumb, if you wish to keep your underlying asset, Ethereum, and you wish to get the premium, you generally want to go for a delta that's 0.3 or less. Now, I'm not going to go over all of the Greeks because this isn't an overview of what are options and how do we understand them. This is simply an overview of the Lyra protocol. But at a very, very basic level, the delta represents the odds of this option being the odds of the underlying asset being in the money, which means in this case above the strike price at expiry. So the chance that Ethereum is above $2,800 by 3 a.m. on February 4th is roughly, according to the metrics used here, 46%, right? So less than half, but still 46%. So there's a good chance that this option will expire in the money. In the money simply means that you will have to sell your Ethereum, and that's that. So the option will be exercised. Now let's talk about buying options. So I just actually used some of my premium that I got from selling a few options earlier this week to purchase an option just to see how these things work. And they work exactly like stock options, which is really exciting. Okay, so basically what you have here, and I love that this is like 24/7, that you can buy and sell these options even in the middle of the night, which you can't do with stocks. So it's really cool. And look at that, 3 sevens, lucky numbers. So, okay, so basically when you buy a call option, what you're doing is you're purchasing the right to buy this asset, Ethereum, at a particular strike price. So I purchased the cheapest one for $17, which is roughly $2 and something in fees. Here it says $3. This changed a little bit. $3 in fees and then $14. Then I get this option, right? And if Ethereum goes to 3,500, well, I'm allowed to purchase Ethereum. I'm allowed to, don't have to, I'm allowed to purchase Ethereum for 3,000, right? Which is making like a $5,000 or $500 profit if I wanted to. So I reserve the right to do that. If I don't want to commit to buying Ethereum right now, but if I'm bullish on it and then it goes way up, then I have the right to buy it at a much lower price. So cool. Now, really what most people do with their options is they flip them. So you can see that this is 70 now, but this option was worth much less a couple days ago when Ethereum was low. Look at the chart of Ethereum. When Ethereum was down here, this option Ethereum was down here. When Ethereum was down here, this particular option was probably worth like, I don't know, 20 bucks. Who knows? But now it's worth 70 bucks. So if Ethereum continues to rise, now I don't personally think it will, but it might, right? We're 2 greens above, two candles have closed above the 8. So maybe it'll keep going up. I hope it does, because then I can flip this option, which I really didn't want to buy, but I did it for the video. So if the value of Ethereum continues to rise, then I can sell this option for more than I bought it for, which is what most people do with options that they buy. And to do that, I would just go over to positions. You can see that I have 2 positions open right now. Now, technically, the reason my PL there is negative is because I sold these 2 calls for $80, and now they're worth much more. So had I waited, I would have made more, but I didn't know Ethereum was going to continue going up. I made a bearish bet. So I still made profit. It's just that I made less money than I could have made, which is why it has that negative 47. However, for this one, I am now in the red because the value is 1458, but I paid a fee as well. So I paid 1768. However, if this option becomes valued more in the next 3 days before expiry, then I can click close, and I can close a position, and they will pay me more than I paid, which is great. So right now you can see that they're only going to pay me $11, so I would be at a $5.90 deficit. But I don't want to be at a deficit, so I'm going to wait and see. Hey, maybe I can get a good deal on this if Ethereum goes up. I don't know if it's gonna, but that's how you would do it. So if you want to make bullish bets on Ethereum, you can buy a call option and then sell it when the premium rises in value. Let's talk puts really quickly. So puts are just the opposite of calls. They're pretty easy to understand. When you sell a put, effectively you're selling someone the right to sell you their asset at a certain price. I know that sounds crazy. So here we have Ethereum, and if you wanted to, let's say you wanted to buy Ethereum, but you only wanted to buy it at 2,600. Like you were thinking 2,600 was your price. Anything under 2,600 you're totally fine with. But if Ethereum went to 2,600, like you'd be happy purchasing it at that price, no qualms. Well, in that case, why not get paid to do that, right? Why not get paid to hold that position that you would like to purchase Ethereum at $2,600. You can do that with a put. So here, you would sell this put, you would collateralize $2,600, and you would then get paid $16. And if the underlying asset, in this case Ethereum, went under $2,600 by the expiration, and held under at the expiration, then you would be committed or obligated to purchase Ethereum for $2,600. So if it was went down to $2,000 a year, you could have got a way better deal, but you still got the Ethereum. If, however, the underlying asset, Ethereum, stays above $2,600, well, you keep your collateralized money, and of course you kept the premium. So good on you. You made a profit, and nothing happened to your underlying collateralized money. Now you can see here there's a roughly 17% chance of it going down. I think the deltas on crypto, there's still a lot of work to be done, simply because it's so much more volatile than stocks. You can see there's a 53% chance of it going below 2,800 according to these again, and so of course the premium's higher. Now you can also buy these and flip them as well. So if you're bearish on Ethereum, and I'm kind of bearish on Ethereum right now given the macro trend of the market, if you are bearish, this would be a perfect time to buy a put. You know what? I might even buy it. Well, the expiration's in 3 days. I don't know if I want to buy a put so close to expiration. But I could buy this put here. This is a good hedge, actually. You know what? Maybe I will buy this just to hedge my bets. Because if there's different spreads. I'm not going to go into spreads. You guys can look up spreads and stuff on your own. But for 22 bucks, and we're just looking at this chart, and I could be totally wrong here, right? Totally wrong. But you make a bearish bet on this chart. Who knows, right? This looks like, who knows? I'm not a TA. But okay, so just click this, click buy put. you go through that, and then you have it, and you can sell that put if it appreciates in value. All right, so I think the last thing I was going to talk about is the future of Lyra. So as you can see right now, there's only one expiration date. Now on Friday, which I believe is the 4th, you will see 4 new expiration dates for the new month. And so each expiration date will have different premium, because the farther away you go, the more theta you have, and theta will decay over time. Effectively, that just means you will get paid more for farther out expiries, and so you'll have 3 more options. So in the future, they're going to look at having 12-week rolling options. And what I mean by rolling options is you will have the ability to roll your option over. And if you know what that means, hey, if you don't know what that means, it effectively means that if you don't want your option to get exercised, you can roll it over to the next week. Sometimes you can even get paid to do that, a little tiny bit of premium, and not have your option get exercised. And one more thing about Lyra is that they will be doing partially collateralized options soon. Partially collateralized options simply mean that you don't have to put up the full collateral to get the full premium. Effectively, you're leveraging, right? So do keep in mind that you can lose a lot of money by doing that, and it is more dangerous. It's like margin trading. So if you've done margin trading, then you're going to be totally comfortable doing this. If you haven't done margin trading, don't do this. Don't do the partially collateralized options trading, because you know it's a very risky thing to do. But that's going to be available in the coming future. The 12-week rolling options are going to be available in the coming future, and I'm excited for all of it. I do think Lyra is the most robust options protocol on in DeFi, and I really like them. So they're not a sponsor. I don't do sponsored videos, but yeah, pretty cool. And that's really it, guys. So thank you so much for watching. If you wanted a video on Lyra and options a while ago, I already did one on Patreon, because I do a lot of things there, like one-off videos just to talk about strategies and whatnot. Link in the description if you guys want to join. Also, if you have questions about any of this, I want to talk to my amazing team of mods who are DeFi experts, in my opinion, then you can join the Patreon, the paid Patreon, $20 a month, totally up to you. And that money goes right to the mod team, and they will answer questions day and night, because they're all in different time zones, which I love. So feel free to do that. The way you would do that is join the Patreon and do the $20 option. The $20 option is just for access to the Discord. And again, that money goes to the mod team, not to me. So, you see those Patreon numbers, you think, whoa, but really a lot of that money is going to my team. So, all right, guys, thank you all so much for watching. Really, genuinely, I mean it. Your support is mind-blowing and humbling to me. So God bless you all. I love you, and have a wonderful rest of your day.